Hey, all of you genius technical analysis dudes out there. You brilliant market predicting technical analysis genius dudes, crypto dudes, and dudettes. Where were your predictions yesterday that the total market cap would go up 7.1% in the last 24 hours to $1.323 trillion? Where were your predictions that Bitcoin would increase 6% in the last 24 hours? That Ethereum would be up 8.3%, that Binance would be up 7.8%, and Cardano up 9.8%, or Dogecoin up 16.1%, or Polkadot up 13%. Where was that technical analysis? You hear the crickets? It wasn't anywhere to be found. Everybody was talking about if Bitcoin goes below 30,000, it's going to just go down to 20,000. There was total panic and fear in the market yesterday. Listen, there's two things that yesterday taught us. Yesterday was painful. A lot of the cryptos were down 15, 20, 25, 30%. Bitcoin dropped down below 30,000. There was palpable fear in the cryptocurrency space. A lot of people, I can guarantee, became victims to that and sold, thinking I better sell now before it goes down more. And yesterday, what did I say? I said the whales are going to accumulate. The whales are going to come in and they're going to buy this. This happens over and over again. It's like a fleecing of the uninitiated, of the retail investor, of the person who can't stomach it, right? There's two takeaways to learn from what has happened here in the last couple days. Number one is this. You can't predict the cryptocurrency market. You can't do it with technical analysis. You can't do it by paying attention to the news every day. You just can't do it. The market's too small, it's too young, it's too new, it's too easily affected by whales. It's too easily affected by black swan events, by FUD that gets put out there by significant figures, or in the inverse, by positive statements from celebrities or well-known people at this point in time. You try to predict the cryptocurrency market, it's gonna smack you up downside the face and churn you up and throw you out. That's what's gonna happen. That's number one. All these technical analysis people that try to predict the market, they're wrong most of the time. Everybody's right some of the time, just because 50% chance. So don't waste your time with that. Don't try to be a trader in that way. If you're going to trade upon what's happening now. If you buy at a low, like yesterday, you look at the market and you go, wow, we're down 20, 30%. I'm going to buy and I'm going to hold until it recovers. That might be a week, that might be tomorrow, that might be 6 months from now, that might be 2 years from now. But that's how you win. If you try to short or you try to long or you play this game, in the cryptocurrency market, you will get beaten up. You will win sometimes and you'll think you're a genius and the hubris will grow. Your arrogance and your pride will grow. And then you're going to get smacked down hard. That's what's going to happen. I'm just telling you, that's what's going to happen. Number two is you have to have the emotional fortitude in this space to survive. You have to be able, especially if you put significant amounts of money in. People's portfolios yesterday, we're talking, if you had anywhere near $100,000 or more dollars in crypto yesterday, you had significant losses in dollar amounts, and you're looking at that and you're going, ho, 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 ho. And if you panic sold yesterday, you lost big time. Because boom, today we're already back up at levels very close to where we were the day before, 3 days ago, 2 days ago. That's the takeaway. Bitcoin is currently $31,561. Ethereum $1,906. It was down at $1,700. Binance $286.64. Cardano $1.16. It dropped as low as $1.04, I think. XRP 55 cents. Dogecoin 19 cents. Polkadot 12 cents. Uniswap $15.95. Litecoin $114. Solana $26. Chainlink $14.84. Polygon got hit hard, and then it came back up 18% to 82 cents. Did you buy the dip? Did you do what so many of it had to be retail investors were doing, selling out of panic? Right into the hands of whom? Right into the hands of Cathie Wood. Cathie Wood's ARK Invest purchased 450,000 GBT shares in 2 days. Cathie Wood's ARK Invest has purchased 13 million worth of GBT shares and 43 million in coin stocks in the past 2 days alone. Woo! Woo! The price of the primary currency, cryptocurrency, Bitcoin, went through a steep decline yesterday as it fell from 31,000 to a monthly low of 29,200 in several hours, while the community sentiment went even deeper in a state of negativity. With the fear and greed index plummeting into extreme fear, it seems that Cathie Wood's ARK Invest has used the opportunity to buy the dip because she's freaking brilliant. When everyone else is fearful, that's the time to be greedy. When everyone else is greedy, that's the time to be fearful. Cathie Wood's putting that famous strategy into practice. It's Warren Buffett's statement. Putting it into practice. Are you? A $1.7 billion investment firm bolsters holdings in Grayscale Bitcoin and Ethereum trusts. Asset management firm Rothschild & Co, we talked about them yesterday, corporation reveals in a filing that it bought tens of thousands of shares of Grayscale products in the last quarter. Word of the day is verklempt. Verklempt. It means overly emotional and unable to speak. Verklempt. Verklempt. All right, we're going to wrap things up today with a little bit of a discussion on how inflation is measured. We're getting back into the report from Kraken about inflation. Inflation, the Insidious Thief is the title. How is inflation measured? In the United States, we use this thing called the Consumer Price Index. The Bureau of Labor Statistics, the BLS, not the BS, although they do put out a lot of BS. It's the BLS. Uses the Consumer Price Index. The CPI is the most commonly used measure of inflation. It tracks the change in the cost of living by calculating the weighted average of price changes in a basket of consumer goods and services. This basket attempts to reflect common consumer spending behaviors by mimicking the usual products and services purchased. The U.S. CPI rose 5% year over year as of the time of press, the fastest pace since August of 2008. So according to the CPI, according to the Bureau of Labor Statistics' own CPI numbers, inflation rose 5% year over year this last year, which is the fastest since August of 2008. Well, this is not a secret. We know this. Coverage of CPI statistics. Consumers and basket of goods services. Consumers, who's included? Professionals, self-employed individuals, unemployed individuals, people with income below the federal poverty threshold, retired people. Who's excluded? non-metro or rural population, farm families, armed forces, incarcerated individuals, people in mental hospitals. Basket of goods and services. What's included? Housing, medical care, apparel, food and beverages, transportation, miscellaneous goods and services, education and communication, excise tax, recreation, sales tax. What's excluded? Investments, stocks, bonds, real estate, savings, life insurance, income tax, social security tax. To calculate the CPI, the BLS will contact service establishment, doctors' offices, retail stores, and rental units, among others, to record the prices of roughly 80,000 goods and services and compare its findings to 1984. A CPI of 100 implies inflation is at levels last seen in 1984. They go into the details of how the formula is calculated, but I'm not going to cover that. Personal consumption expenditures, the PCE. Like CPI, the Bureau of Economic Analysis has a personal consumption expenditure index that seeks to measure inflation by gauging the change in price of business, goods, and services. Because the government and central bank focus on different inflation measures, they utilize other price indexes. For instance, the government uses the CPI to make inflation adjustments to certain benefits, Social Security. While the Fed focuses on the PCE, historically PCE has come in lower than CPI. The US PCE increased by 1.2 percentage points month over month to 3.6% at the time of press, up from 1.4% in January 2021. The Fed previously used the CPI to measure inflation before January 2012, but switched to the PCE index. The index responds dynamically to changing consumer preferences because expenditures weights can vary as people substitute goods and services for others. It includes a more comprehensive list of goods and services, and the Fed can revise historical data to reflect new data. All right, let me just put that into simplified language. What that means is this. If beef has gone up dramatically because there's been a shortage of hay and grain to feed the beef because of a severely hot summer like we're having right now, then what they will do is they will say, well, beef's expensive, so people aren't going to buy beef, so they're going to buy chicken instead. If chicken has also gone up significantly because there's also been a shortage of feed for the chicken, then they'll say, well, people are going to buy turkey, ground turkey instead. Whatever it is that is the cheapest, we'll throw that into the calculation dynamically and dynamically weight it to arrive at the most positive inflation number we can achieve. Essentially, I mean, the index, as is stated here, responds dynamically to changing consumer preferences because expenditure weights can vary as people substitute goods and services for others. It includes a more comprehensive list of goods and services. But there still was significant inflation of whatever the good and service was, the beef, the chicken, you name it. The prices went up. Seems like it should be included, right? All right, we're not going to talk about how the Eurozone does it. We're not going to talk about how China does it. Here are some of the common criticisms of how inflation is calculated in the United States. Skeptics have long argued that calculations for the CPI and other measures of inflation are flawed. These arguments range from questionable economic incentives to outdated methodologies. In particular, skeptics believe that the inflation figures that the U.S. government and Fed throw around are incorrect for the following reasons. Number one, the government has incentives to suggest inflation is lower because it affects public programs that use inflation as a benchmark to set policy. Because the CPI determines the incomes of tens of millions of Americans living off government programs, meaning food stamp recipients, Social Security beneficiaries, military and federal service retirees, and children on school lunch programs. The inflation reading directly affects the amount of money the government must spend on these income payments to keep pace with the cost of living. Therefore, a higher CPI is more costly and less manageable to the government than a lower CPI, especially when a government is deeply indebted. Well, that criticism makes some dang good sense, doesn't it? Consumer spending habits, another criticism. Number 2, consumer spending habits may change with the economy, but the CPI doesn't account for substitution. Therefore, the government may overestimate inflation. Even the BLS freely admits the flaws of the substitution effect. Number 3, the CPI doesn't capture the regional price differences and variations in buying patterns across different groups. Meaning citizens living in expensive areas, such as San Francisco, will have different spending habits than those living in cheaper locations, such as Wyoming. Not accounting for this difference can result in a lower inflation reading. There's a chart here that shows the difference between common living expenses between McAllen, Texas, and San Francisco, California. Housing is easily double in San Francisco, California. Food is somewhere in the order of 20%. Taxes, again, probably another 15-20% higher. The CPI inadequately represents certain expenditures. For example, the index includes out-of-pocket medical expenses, but not the portion of medical costs sent by insurance companies and government health care programs. Number 4, the omission of productive investment assets, stocks, bonds, and real estates conceals declines in an essential component of purchasing power. CPI may measure increases in the price of consumption assets, but it doesn't account for reductions in the dollar's purchasing power against productive capital assets. For example, the total market capitalization of the U.S. stock market since the start of 2020 has increased by 30%, driven by aggressive money creation efforts. If you want to get numbers that are calculated in a more traditional historical way that tend to be, or I believe, much more accurate, I'm going to introduce you to shadowstats.com, which is run by John Williams. Shadowstats.com makes no attempt to dynamically allocate this or that and cook the books. It just uses raw data here. I was going to read you some of this, but we're out of time. I think 15 minutes is probably well expired. So I'm just going to mention it briefly now. Maybe we'll take a look at some of this tomorrow. There's some very interesting stuff about what's actually going on in the economy right now under the section Economic Headlines. We'll take a look at this. It's not a pretty picture, actually. My friends, that's enough for today. Thank you for tuning in to the Block Thrasher Morning Brew. I want to see you again tomorrow. Hope you have an incredible day. Appreciate y'all. Press on. Remember, it's always a good day to stack and earn more crypto. Yesterday was a particularly good day. See you tomorrow. Bye.